Hi, today is Sunday, February 9th, 2025. I've just read the very short article about ETF. Now I'm going to read a rather long professional analytic article about ETF, mutual fund, and 401k and so on by Investopia, which is my reliable source for financial matters and advice. And when it's a go-to place when you look for a definition for a financial term, right? So I'm going to read these articles so that I could learn more about ETF and also to learn English by practicing, by reading it aloud with exact pronunciation so that I could always be ready and be confident about my English because I am Korean and I work for Korea Telecom KT, number one cloud service provider and carrier in Korea. But in due time, I have to retire, and I am all ears about your offer about my next position overseas, preferably in America or Canada or England or Australia, New Zealand. I don't care. Mostly US would be much better option for me. This article is from Investopia.com, and the title is ETFs are booming. Here's what it means for your retirement plans by Dara Abbasi Ita, published January 30th, 2025. So it's only 9 days old, right? Genre images, get images, right? Get images. Why use get images when you can use other images? Exchange-traded funds, ETFs, have surged in popularity, with the global ETF assets surpassing $15 trillion. These investment vehicles, which work like mutual funds but trade like stocks, have had seismic growth, more like a doubling in total assets in just 5 years. Right? It worked like mutual funds but trade like stocks. This is what exchange traded funds have surged, right? Uh, these these investment vehicles, which work like mutual funds but trade like stocks, have had seismic growth, more than doubling in total assets in just 5 years. This is all well and good. That's another cliche, right? This is all well and good. This is all well and good, right? This is all well and good. But what does it mean for your retirement plans? If you are still relying solely on traditional mutual funds or individual stocks to build your nest egg, it may be time to rethink your strategy. More than 60% of US investors now plan to buy ETFs, up dramatically from just 37% in late 2022. The reason? ETFs typically cost less than traditional mutual funds and offer more flexibility in how you can buy and sell them. Right? Key takeaways: the Vanguard S&P 500 ETF (VOO) made history, right? Made history in 2024 by attracting over $100 billion in inflows in a single year. The first time any fund has achieved this milestone, right? Made history. Made history, man. Made history. What ETFs are becoming more prevalent in 401k plans, particularly through target date funds. What are ETFs? If you get what a mutual fund is, then an ETF is even easier to understand. It's an investment fund that holds many stocks, bonds, and other assets, just like mutual funds, but can be bought like a stock in a brokerage account, right? ETFs hold assets ranging from stocks to bonds to crypto to commodities, and many are designed to follow different investment strategies: high dividend yields, growth, overseas investing, etc. Massive growth in exchange traded funds (ETFs) since their introduction, right? It was introduced in 1995, then tremendously grew in 2020, right? Total assets, U.S. ETFs, $1.914 trillion. 2024, money market ETF introduced. 2023, SPDR hits $500 billion in assets, ETFs about 30% market share. 2024, first spot crypto ETFs. 2021, 1,200 ETFs trading, 10% market share. 2000s, introduction of gold, actively managed, and volatility ETFs. 6. ETF market share, 2% of fund assets. 7. First ETF introduced, S&P 500 SPDR chart, Investopia, Peter Grattan, a source, U.S. Federal Reserve of St. Louis. Why this matters for your 401k? Your 401k is likely getting an ETF makeover, whether you realize it or not. The average 401k balance hit $132,300 in 2024, and ETFs are playing a bigger role in that growth. Target date funds, which automatically adjust your investments as you near retirement, are leading this ETF revolution in 401ks. These funds now hold about 29% of all 401k money, up from just 16% in 2014. And while you might not be directly investing in ETFs, your target date fund manager almost surely is. By 2027, experts predict these funds will receive about 2/3 of all new 401k contributions. Why does this matter for your retirement savings? ETFs typically charge lower fees than traditional mutual funds. Below is a table highlighting the differences among investing in stocks, mutual funds, and stocks. Stocks versus ETFs versus mutual funds. Stocks, ETFs. Risk: concentrated in one firm. Diversified pool of assets. Costs: commission bid-ask spread. Commission bid-ask spread, expense ratio, premium, discount. When you can trade market hours, prices continuously fluctuate. Market hours, prices continuously fluctuate. Tax efficiency: most control over capital gains, less control over capital gains. Table: Investopia, Peter Grattan. Get the data, add this chart to your site. What is the latest on ETFs? Market views. Vanguard S&P 500 ETF VOO. The Vanguard S&P 500 ETF VOO made history in 2024 by attracting over $100 billion in annual inflows, right? Annual inflows. Let's remember the word, man, inflows, not outflows. The first time any single fund has reached this milestone in a calendar year. By year's end, the VOO had $101.1 billion in new investments, surpassing the combined inflows of its two closest competitors, iShares Core S&P 500 ETF IVV and the SPDR S&P 500 SPY. It's not surprising then that a recent Investopia reader survey found it the most popular choice of investors. VOO remains reader ETF pick for the next 10 years. If you had to invest in one ETF today and hold it for the next 10 years, which would you choose? Vanguard S&P 500 ETF 11%, SPDR S&P 500 ETF Trust 7%, Investco QQQ Trust Series 1 6%, Vanguard Total Stock Market ETF 3%, S&P 500 ETF 3%, Schwab US Dividend Equity ETF 12%, and there are many other ETF. Open end N equals 1,406. That's a survey, right? That's the what we call mother number, right? Mosu. What's the exact word? Sampling data, right? Sample numbers, showing stocks which received more than 1% of response share. Bottom line, ETFs have exploded in popularity, and that's big news for your retirement savings. As more investors shift toward ETFs, traditional mutual funds are losing ground, and passive investing is taking center stage. ETFs have plenty of benefits. They are comparatively easy to trade, can help lower your taxes, and hold assets for just about any strategy. But they still have their risks. If your ETF is in the wrong market or following the wrong approach, the stock market drops as a whole. You will be in for volatility and a stressful ride. For retirement savers, it's best to choose ETFs that align with your time horizon, risk tolerance, and income needs. Your time horizon, right? That align with your time horizon. Compete risk-free, so that's it, and this is advertisement. Compete risk-free with $100,000 in virtual cash. Put your trading skills to the test with our free stock simulator. Compete with thousands of Investopia traders and trade your way to the top. Submit trades in a virtual environment before you start risking your own money. Practice trading strategies so that when you are ready to enter the real market, you've had the practice you need. Try our stock simulator today. Maybe later, all right? So that's ETFs, right? ETFs. You just pull in money on a monthly basis into the ETF, and the ETF managers buy stocks, bonds, or commodities, cryptocurrencies, depending on your designation of risk tolerance, time horizon, and the volatility preference, and so on. So basically, they buy like not just one, but like 100 or 500 stocks with your own money. So it's all divided by the price range or EPS. They have their own formulae, right? Thanks for listening. Have a wonderful Sunday. Bye-bye.